Welcome to the For Love and Money podcast, the show where business and social purpose meet to inspire a movement for positive change. Here's your host, Carolyn Butler-Madden.
In this episode of the For Love and Money podcast, my guests are Geoff Wilson, AO, Chairman and Chief Investment Officer of Wilson Asset Management and founder of Future Generation, and Caroline Gurney, CEO of Future Generation. Now, Geoff has over 42 years direct experience in investment markets, having held a variety of senior investment roles in Australia, the UK and the US. He founded Wilson Asset Management in 1997 and created Australia's first listed philanthropic wealth creation vehicles, Future Generation Investment Company Limited and Future Generation Global Investment Company Limited. Caroline is Chief Executive Officer of Future Generation, and she has more than 25 years' experience in the financial services sector focused on marketing, corporate affairs, and corporate social responsibility. Caroline has held senior roles at UBS and Citibank and has worked in London, across Asia Pacific and Australia during her career. She's a member of Ascham School Council and the Centennial Park and Moore Park Foundation, an ambassador for the Australian Indigenous Education Foundation, a director of Our Watch, an organisation focused on preventing violence against women and children, and she set up and was a director of the UBS Australia Foundation. Caroline has also previously served as a director of Future Generation Australia and as a council member of Chief Executive Women, and is currently an active member. In today's episode, Geoff and Caroline share the story of Future Generation, how the model works, what it has achieved, and the scale of the impact is quite extraordinary. And they share their ambitions for the future. It is a great example of business leveraging its stakeholders to create significant impact. Enjoy. Geoff and Caroline, welcome to the For Love and Money podcast. Thank you so much for making the time to be here.
Thank you so much, Carolyn.
So let's kick off with the first question I ask all my guests, and that is there a role for love in business? Who would like to take that one first?
I'm going to let Geoff go for that one, considering.
Okay. Yeah, hey, I'm happy to 100%. The strange thing is, the area I work in is funds management, and the focus in funds management, or what makes you good at a fund manager is your ability to turn down your emotions, or so when you're investing, you don't get caught up with the fear or greed, and obviously, love is another emotion, and the real challenge for a lot of people in funds management is, when they get home from work and they're in a relationship, they've got to turn up their emotions, and so my view is love is just another is another very powerful emotion that there's enormous amount of room for it, and probably if people were focused on that a little bit more, then maybe the business community would be a little bit better.
So were you saying it's almost like maybe they need to turn that dial of emotion, that particular dial of emotion up a little bit?
Oh, 100%. 100%. I mean, the tough thing is in our game is you've got to turn it down to do your job. And so but in a lot of industries, you don't have to. So to me, ours is just a small part of a business community. But
Interesting.
I think there could be a lot, there's room for a lot more love in business. I agree.
Wonderful. Thank you, Geoff. Caroline?
I think you really have to love what you do. And the more you enjoy what you do and the more passion you have something, I think the more you try and hopefully the more you achieve. So for me, I'm not investing the money per se, like Geoff is, but I'm talking about what we do. And I think, love and passion, that's what makes you authentic. I think it's very hard to talk about something if you don't really believe in it. And every time I talk to one of our not-for-profit partners, I get quite emotional because what they're doing is amazing and they have a love for what they do and they have a love for helping people. And fund managers, I think it's really intense to do that work day in, day out and to look at markets and look at, so many variables and how it's going to impact your portfolio. I think you have to love it. I mean, they think about it, I reckon, well, majority of them, like 24 hours a day, they sort of live it. So yeah, I think, passion, love, all of those emotions are really important.
Thank you. Isn't it so interesting that, like you said, you get quite emotional when you talk to your impact partners? And every time I see somebody in business or leader or whatever it is getting emotional about something, and usually they're trying to tone it down and reel it back in and, not be emotional. But that's what people connect to. You can't hide that and you can't fake that, really. And people know it when they see it. And it just is something that builds connection. It builds trust. Thank you for that. So, Geoff, it would be great if you could share with our listeners how you came up with the idea behind Future Generation.
Yeah. Well, I was lucky enough to be in the UK and picked up the Financial Times. I was reading through the Financial Times and I noticed that there was this gentleman called Tom Henderson setting up a company where he'd organised a whole lot of fund managers to manage the money for free. And then his main focus was to support cancer research in the UK. And then his sort of secondary focus was to help, I think, another 12 or 13 odd charities. So I just thought, what a great concept to get the finance industry to do what they do and do it pro bono, and then to help other people. And then came back to Australia. That was about 12 years ago, and said to myself, they were doing it in a structure that's listed on the stock market in the UK. The money we manage $5 billion for about 130,000 shareholders, and that's in structures. Wilson Asset Management structures. We've got 8 of them listed on the Australian Stock Exchange. And then, I know we're talking about the Future Gen structures, FGX and FGG, which are listed on the stock market too. But I already had that experience. I set up my business about 26 years ago. So I knew that part of the equation. And then I thought, wouldn't it be great if I could come back to Australia, go around and see the fund managers, get them to manage the best guys, the smartest guys, to manage the money for free. And that allows 1% of the money to go to charities. And talking to my wife and daughter, one area that they were very passionate about was children at risk. So the first one, FGX we created was that. And when we went to raise the money for that entity through a initial public offering, like any company when it lists on the stock market does, we're going around seeing potential investors. We thought we'd raise very little. Now, we were hoping that we had to raise more than $15 million to get it started.
Wow.
And we're thinking, look, let's hope we raise 20 or 30. And we thought the maximum we could raise, and we said this in the document, which is called a prospectus that we sent out, go to people, the maximum we raise is 200. And we ended up being oversubscribed. We actually could have raised probably 300 or 400 million. So
that's amazing.
It is. And now the two entities, they're about 1.1 billion in the two Future Generation entities. So they give, and then we went from children at risk to youth mental health when we did the global one FGG. And, so that's $11 million a year that goes to support our children at risk and youth mental health in Australia. And I mean, we've seen with what's been happening in Sydney over the last couple of days and that's an area, mental health, that is significantly underinvested by the government, which is unfortunate, and significantly more money needs to go into there. But we'll probably touch that a little later.
Yeah, thank you, Geoff. And you're referring to the Bondi shopping centre knifing incident and also the other terrorist incident we've had, which it just seems to, all be unfolding at the same time. I'm curious, before we go deeper into this, you said you saw Tom Henderson's, what he was doing, and you thought it was a great idea. Lots of people look at things and see, things and go, wow, that's a great idea. But not many people actually act on it and do something about it. And I'm curious, on 2 points. One, apart from it being a great idea, what made you go for it? And I think another question that I think is probably aligned is, the positive response that you got from these fund managers. Where's that coming from? Because they're busy people, right?
Yeah, and the fund managers on one side and then the investors on the other side.
Yeah, and the investors.
Probably okay, the first part of the question is, so when I read it, he was raising the money and listing it on the stock market. And in the UK, they call them closed-end funds. In Australia, we call them listed investment companies, LICs. And that is the majority of our business. So when I saw it, I thought, what a great concept. We could do that in Australia. And it did. I got back to Australia and it did take a couple of years before we raised the money. So I talked to a lot of people and you're sounding it out and you're trying to work out the best way to go forward. And sometimes you can, that's right, hit roadblocks, but you work through it. And maybe it comes back to how you're brought up or something. Like I was one of 6 kids and I think Dad sort of gave us the idea that you could pretty much, if you put your mind to it, you could do it. So the question was with these entities, we were going to create them. The question is how long it took us to create them. So to me, that was the future gen entities. So that's that part. And then the second part of the question is first of all, you had to get the fund managers to manage the money for free. And I mean, the great thing from my perspective is that all the fund managers we asked except one, and that one had a conflict because they were managing some money for a charity and they thought it was a bit of a conflict. And this was the early days. No one knew what we were doing in any detail. It didn't have the credibility we have significantly now. But all of the fund managers said, yes, we would. We'd manage money instead of charging our normal 1% management fee and performance fees. We'll manage it and we'll give you back that 1% or we won't charge you any fee at all. So to me, that was incredibly heartening and positive. And I suppose it's like most people. We all want to help, and it was just providing the outlet for those fund managers to help. And then on the other side, when we went to raise the money, when we thought, the investors, the people that are putting their capital at risk, we went around and we started in Western Australia and we did a Australian roadshow, and it was just they just thought it was a fantastic concept and a way of getting exposure to the best fund managers in Australia. And instead of that management fee going to the fund manager, it was actually going to the charities and effectively not paying a performance fee because it's actually a win-win-win. Like it's a win for the investor because they actually get a really good deal. Since we set the two entities up, what the investor would have paid about $130 million to have this money managed, and that's because the fund managers have performed well. So there's a lot of performance fee in that figure, and they've only paid a little over $75.8 million. So that nearly $60 million is a benefit to the investor, and there's the $75.8 million is the money that's gone to the charities, to the youth and mental health and the children at risk. So it's definitely a win for the investor. They're getting a great deal. It's a win for the fund manager because it really gives them an opportunity to give back. And as we were saying earlier, like people, they want to help. And you were talking about the weekend at Bondi, the amount of people that stood up there, like it encourages you. And it was shocking what happened, but it was shocking. So to me it was, and that's the fund manager, the investor, and in theory it's a win for the not-for-profits, for the youth mental health charities and the children at risk charities, because they're getting this untied funding which allows them to receive money on a consistent basis over a consistent period of time. So it's probably the lowest cost funding they ever get. They don't have to employ a development officer for that. And there's some consistency. And also, the money's going to their corpus, so they can spend it as they want, and which gives them enormous flexibility.
You just slipped in there that 75.8 million figure. So I want to invite you, Caroline, to come in and actually talk about that, because that's extraordinary, right?
It is absolutely extraordinary. I mean, if you think about it, that's over a period of, 9 years that we've given that amount of money. And I think, the not-for-profits we support, we now have 24 not-for-profits. So we have 14 in the prevention and well-being of, mental ill health space and the money that we have just started giving to them, we've just given our second payment to them. We're working with them now. I mean, it's changing the way they actually help young people. And one of the other things we're really proud of is we've just started measuring the actual impact that they do. So we actually get like a measurement of their impact, and they also have a way of measuring their individual impact. And we just actually won, which I'm incredibly excited about, a Philanthropy Australia Award for collaboration. Fantastic. So that's really a testament to the team and also the not-for-profits in terms of the work they've put into it. And we won that with SEER data and also with social outcomes. So it was really collaborating with, how to actually put a measurement in place and then how to track it with the platform. So that's extremely valuable for the not-for-profits and for us, and also for our investors. So they actually see, what impact they're having. And then also, we support youth at risk through Future Generation Australia. We have 10 not-for-profits there, and that basically covers, music lessons, 250,000 free music lessons across Australia, that's helping, young people in need in terms of helping with their self-esteem, inclusion. And then we've got, another not-for-profit that helps, young people that are homeless, finding them homes, finding them sort of shelter, and actually giving them, support throughout that really what can be a terrible time. And then you've also got the mentoring program. So, I think the work that we do, and when you talk to the not-for-profits, it's incredibly valuable. One of them is Maribel in Melbourne, and they help people, young people that have been disadvantaged by not having a parent through drug or alcohol abuse. And the work they do is absolutely incredible, and they are the best at what they do. And the fact that we can fund these amazing organizations with untied funding, as Geoff said, can make a real difference to them, because they, just like I would never tell you what to say, we would never tell a not-for-profit what to do with the money that we give them. And that's really invaluable for them, because it can be for their IT platform, or it could be for another care work, whatever it might be, they allocate that funds to that particular place, which is incredible.
It is, that untied funding. I know how important that is to nonprofits, because obviously they've got a lot of partnerships where, they want their donations to go into a certain area, and that can be quite onerous for them. So you mentioned three things there. You talked about the actual funding, the untied funding itself. You talked about measurement. So you've actually been helping them measure their impact?
Yes.
And then you've talked about mentoring, and I want to come back to that. But I guess what really starts to stand out to me when you talk about the measuring their impact is it goes to your skill set, doesn't it? Because you're talking about investment and returns on investment. And so it's just a different way of looking at investment rather than financial returns, it's social returns.
I think that's exactly right, Carolyn. I mean, what we're trying to do is to get a sense for the not-for-profits and for our sort of investors and for ourselves exactly what impact they're having on these young people's lives. So we've been doing it with Future Generation Global, because that's a newer cohort of not-for-profits we're supporting. And in a way, what we've formed a group of not-for-profits that can actually, help each other as well. So, for example, one of our not-for-profits, Backtrack, which does amazing work with young boys and girls who are homeless, they're at the police station, they're about to be arrested, but Backtrack basically will help a child forever until there is no need for it. And they're using a program that one of our other not-for-profits not-for-profits, which is basically acting out and role-playing what they're feeling. They're using that in their work now.
Wow.
So we're actually getting a lot of sort of collaboration between the not-for-profits, which will make a huge difference. And what we also do is we also give capacity funding as well. It's just a very small amount, but it really does help the not-for-profits get to where they need to be and also help them to collaborate with others, because we want to help them in something that's tangible for them and can improve, their performance as well. So, for example, the tracking that they're doing, it's pretty incredible because they've actually put in what they want to track against. It's not it's not us saying, right, I want this number. We're only using data that we can use for them as well, which I think is incredibly important. So we're not collecting data for the sake of just getting in some numbers.
Yeah.
And I think when they have that, they're going to be able to tell a much better story about the work they're doing. And then we can use that to hopefully lobby for more funding in that prevention and mental health space.
That's amazing. And you mentioned the mentoring program. So where does that come into it?
Well, that's actually, I'll give you one example, which is Raise, which is a not-for-profit, which basically goes into schools and runs these amazing mentoring programs. And they have mentors from all over Australia. They're across Australia, and they're working with young people in schools, helping them make better choices, getting them to understand what's going on around them, and also to give them that inclusion. And sometimes, the way to help them, the tools to make sure that they are building their resilience, they're making and communicating well to people around them. All of those things that, we really need in today's society, because, with all the pressures on young people who I think we really believe are incredibly strong, we just want to give them the skills to make them stronger and to be more resilient for the future.
Amazing. And I read on your website that you have a big goal for 2030.
Oh my gosh, yes. Well, I think actually Geoff might have changed it.
Oh, really?
Obviously, we're very, very much in line with the government. They want to double philanthropy by 2030, and we want to have given, 100 million by 2030. But we've already given, as you said, 75.8 million. And so Geoff the other day was saying, I think 130 million is what we should be aiming for.
Yeah, brilliant.
It's a big, hairy, audacious goal. But at the same time, we really believe it's very attainable. And I think, with everything that's happening around us, homelessness, inflation, all of those things, I think we all want everybody to do well, but we also want the future young people to do better. So I think that people are very determined to make a difference. And so I really think these vehicles and others like it, Geoff always talks about the fact that they are very scalable, can really make a difference for the future.
Absolutely. And Geoff, I'd love to bring you back in and ask you, when you started with this idea that, you brought over, did you imagine you could build it to the level you have so far?
Probably not. Well, I think if we're sitting here now, if you'd asked me at the start and said, look, we've got it to 200 million of assets, that's giving $2 million a year to the not-for-profits, we'd probably think, oh, look, that would be a good goal if we could get there. So we would have probably given 18 million to that, to collectively if we'd done that. And after we did we did it, there's two different investment products you can invest in. One that gives you exposure to Australian shares and the other one that gives you exposure to global shares.
Yeah.
And FGX is the first one we did, which gives you exposure to Australian shares, and that supports children at risk. And FGG is the one that gives you exposure to global shares, and that supports children and youth mental health. And to me, initially when we did the first one, a lot of people said, look, this is just a great product. Why don't you do it with a group of global fund managers? We've got some really good Australian ones and get some others from overseas. And I said, no. I said, it's been too much. I did the roadshow with our CEO, Kate Thorley. going and seeing everyone, it's quite an intense period. Like it takes about 3 months. It's quite intense. And so the plan was no. And then I remember actually being in London again, seeing Rania, who helped us in the very early days with our share engagement and comms. She was over there, and we caught up, and she said, "What about the global one?" And this is nearly about maybe it was 3/4 of a year after we'd done the first one, and so all the stress had washed away, and we had a bit of free time.
Why not?
Yeah, exactly. Why not? Why not? And then when we went to raise money for that, of course, we didn't restrict ourselves like the first one, and we raised close to 400 million. So, and so they go to start, 200 and 400 to 600, but now we've grown them to 1.1. And that's a combination of performance, but also we've raised up money. If it makes sense to raise money, then we've raised money as we go along.
Enjoying the podcast? If you're looking for more inspiration, head to our website, thecauseeffect.com.au, for more resources on how you can start using your business as a force for good. Or buy the For Love and Money book. Every copy sold allows us to protect 1 square metre of rainforest. Help us save 10,000 square metres by 2025.
So I'd see you've got 15,000 shareholders in the 2 companies. Are you able to share any insights about those shareholders, how you might communicate to them, how you've attracted them? And I'm just interested to learn a little bit more about them.
To me, the first thing is, and Carolyn, she's dealing with them all the time, so I'll pass to Carolyn. But the first thing is, the shareholders are investing in these listed investment companies because they think they're a good investment. Because they like the underlying fund managers. They want exposure to Australian shares or global shares. And the incredible thing is at the moment, they trade on the stock market, and in theory, and they're trading below what they're worth. So, I mean, at times they've traded above what they're worth, what the assets are worth. But at the moment, because it's been, it's just been a bit more volatility. It's been a bit of a tougher time. They're trading below what they're worth. So if anyone is interested in becoming a shareholder, now's the time you want to do it. You want to buy, you want to try to buy cheaply. You look at the asset value of those the companies, and if you can buy them below the asset value, then that's a good deal. And that is where they are at the moment. But Carolyn, why don't I pass to you? You can give a bit more fuller answer.
So one thing in terms of, it's actually quite easy to buy them. And we're also delighted that CommSec, if you buy through CommSec, you actually get the brokerage fee when you buy rebated back to you. So in a way, they sort of endorse the model, and they've been helping us in terms of getting out to a wider audience, because I think it's really important for all of us. We want to make money. We want to be comfortable. We want to be, we don't want to have to worry, but we also want to give as well. And in terms of communication, we are incredibly active with our shareholders. We have just finished a roadshow where we sort of for 2 weeks, we went to seven capital cities, and we are continually, as I would say, sort of, walking around, definitely going through the shoe leather. But more importantly, we're very accessible. Like, we want to talk to our shareholders. We get lots of calls in and we make lots of calls out because, they own the company, and we just want to communicate with them to say what we're doing and, what the impact is from future generation with these not-for-profits. And I love our roadshows because you can come along, even if you're not a shareholder, and you get to listen to these brilliant fund managers. So we always have a fund manager with us, and we always have one of our not-for-profits talking about the work they do. So, the fund managers, they're the big names in Australia and globally. They're sort of those Hall of Famers, but also these not-for-profits. Like, I think people are really interested to hear, what people are doing for others. And I think it's very much, for Australians, they love the fact that they can do something for others. And talking to a lot of our shareholders, we just did an event with Rotary, actually, and that's very much service before self. And that's what future generation is in a way for many of them. So I think for us, it's about getting the message out, about how to invest in future generation and how you can become involved, because so many of our not-for-profits want help as well. So Raise, which I mentioned, they really want mentors to come and help them across Australia. So if anybody has any free time, they would love to hear from you. But also just talking about investments, talking about markets. I love the fact that our fund managers will talk about, inflation. What does this mean for your house price? What does this mean? They're very good at explaining. And I think one of our roles is to explain, through future generation what the markets are doing, and also to give them some financial education if they need it. I think everybody needs that. No matter how accomplished you are, it's always good to find out more.
Absolutely. And you mentioned, people need to make a return, profit, and that this is called the For Love and Money podcast, right?
Exactly.
And there's a reason for that. It is, I want to, and I talk about this a lot, to dispel the notion that doing good is something that you should just do without trying to get profitability or return on it or whatever, because I just don't think that people who think that way are thinking big enough. If you want to create sustainable impact, impact that you can continue to create and do it at scale, then it has to be profitable. And it's the same, the most purpose-driven companies in the world, like Patagonia, for example, they rely on having a quality product first and foremost, before they even talk about their environmental credentials, even though that is their purpose. So absolutely. So I love the win-win-win model. I think it's incredibly powerful. What I'd love to know is, what bumps have you had on the road to get to this point? Like, have you had any learnings or challenges that you've had to overcome? Or has it been smooth sailing?
Nothing is smooth sailing.
Right.
Absolutely not. I mean, Geoff should probably start on that because he set it up. But I mean,
I'm looking at your faces and it's like scanning. Yeah, which bump in the road?
Yeah, but even when Geoff set it up, like he said, it took him a few years to do it.
Yeah,
it's not something that you can do immediately. You have to bring a lot of people with you to love the investment idea and also to love the not-for-profits. I mean, when we went out with, the expressions of interest in terms of not-for-profits for Future Generation Global, we had 176 amazing applications. And it was incredibly hard to get it down to 14. But what it showed us was the amazing work that so many not-for-profits are actually doing in Australia. That's not necessarily a bump, but it was a really hard decision for, the board, for us to make, to choose which ones to fund.
How did you choose? What criteria how did you get to the 14 you've got today?
Well, we had a number of criteria that we needed to be geographically spread. We wanted one in every state and territory. We wanted them to have under a certain amount in terms of their revenue. We wanted to have low government funding, but we also really wanted them to be able to work together so we could sort of build that jigsaw puzzle. And they really needed to have that runway to growth. Just as like fund managers, they pick those, companies with all of that potential. We wanted to do the same for our not-for-profits. And I think the team and the board, picked some great not-for-profits. And I'm just really excited to be on that journey to see where we end up, especially with that measurement. But the investment side, that's what we have: two pro bono committees, investment experts from Jana, Morningstar, and some fund managers, and they decide, who manages the funds, how much, and what kind of fund manager. So, I mean, that I would say for the IC, obviously, Geoff, you're on there. That's a lot of work as well to get that mix right, and that's something they're continually working on.
Well, yeah, and in terms of probably answering the original question, the bump in the road, or what bumps in the road, to me, I sort of don't see it as bumps in the road, or is it just challenges? And with life, and we know there's challenges every day, aren't there? And I'm more a glass half full person. So along the journey, well, initially it was to get the fund managers to manage the money pro bono, and we had a short period of time to do that. I tend to be quite a good sleeper, and the only time I woke up in the middle of the night, and for those people that do wake up in the middle of the night and can't get back to sleep, I've just got a little bit of empathy. Well, I can understand a little bit what it's like now. You just lie there thinking, I'm never going to get these guys to manage the money. We'd set a timeline, like the prospectus was due to be lodged. So they all we had to get them within a month. Otherwise it wouldn't go ahead. And, there were some challenges there. But and then once you start then growing a business, like at the moment, one of our challenges is to get the share price to reflect the true value of the assets.
Right.
At the moment, FGX is probably trading about 14% below what it's worth, and FGG is about 18% below what it's worth. So for these entities to survive, for anyone wanting to get exposure to these two investment opportunities, you're buying $1 of assets for 82 or 86 cents. It's a great deal. Now, like I don't go shopping much, but I do like buying things cheaply if I do go shopping. And so that's what these are. What we need to do is we need to get them to reflect the assets properly, and we're working on that. And Carolyn's done an incredible job in terms of working on the brand. She's you've only been in your CEO about 2 years, is it?
Yeah.
And it's a big job. Come on, we had a previous CEO, we had a gap of 6 months, so there's a bit of a hiatus there. Carolyn's come on, new energy, had to build out the team. Had to did a lot of work, and talking here as part of it is on the brand. And we've got some fantastic leaders now as chairing both entities. Jennifer Westacott on FGG as chair there, and Phil Lowe on FGX as chair there. So to me, there's a lot of work that has to go on, and these are just pieces of the puzzle that need to be put together to get really strong organisations that will continue to grow and prosper. And one of that piece of the puzzle, Carol's been working on the brand and the awareness, and there's a lot more awareness of Future Gen than there was, go back 3 or 4 years ago. But then also you've got to get the buying, and everyone who owns it, you've got to make sure they're all happy. So you've got to make sure 15,000 shareholders are happy, and then once you've got 15,000 shareholders happy, you've got to get other shareholders that want to buy. So then it trades at NTA, and eventually, it's very simple. It'll get to equilibrium, but it just there's a lot of effort and a lot of time to do it.
Yeah, I can imagine. And those 15,000 shareholders, I would imagine because of your value proposition that it would be the kind of thing that a shareholder talks to friends and family about.
I think so, and we try to do that. So, Carolyn outlined the charities that both entities support, and then what we do is each year, this is the democracy, is each year we send a sort of a voting form to you if you're a shareholder, and a lot of people buy these shares for their children and grandchildren, and it helps them learn about investing, and it also helps them learn about giving back. Because once a year you're asked you say, look, your 1% that you haven't, that goes to the charities, how would you like that split to these charities, and in what proportion you can, and here's a little bit about those charities. So it's a great educational tool as well.
Fantastic. I love it. I absolutely love it. So what's next for Future Generation? What does the future look like?
Well, obviously to grow both the Future Generation entities, but we're fortunate, and Carolyn alluded to it earlier on, since these have been set up in Australia, there's other people have seen what we've done, and there's been other groups set up. So there's about $3 billion in this invested in these type of products.
Wow.
And we put a submission, Future Gen put a submission into the government, the Productivity Commission. We think that the Productivity Commission, if they can create some logical incentive for investors to invest in these from a tax perspective, then you could have $100 billion in this sector.
Amazing.
and then $1 billion goes to charity on an annual basis. Now, to me, that is possible, because you think about it. Yeah, the fund manager, the fact that, like, we manage $5 billion, the fact that we might manage $100 million for free, we still get paid for our $5 billion. So it's very scalable, like a teacher or an accountant or a lawyer or anyone who works and gets paid by the hour. Their time isn't scalable, or what they do isn't scalable, where funds management is. And there's something like $4.5 trillion managed in Australia, and that's paid. Now, I'm sure there could be $1 billion or two. Like, there could be there could be a lot of that could be managed pro bono, or sorry, a percentage of that, a very small percentage of that could be managed pro bono, and then $100 billion is very a small percentage of $4.5 trillion.
Brilliant. Caroline,
Massive opportunity.
Oh, huge. It's massive. And I just love the scale of what you're talking about. And, if by going to the Productivity Commission, what is made possible.
Absolutely. I mean, I think that if the government is incredibly serious about doubling philanthropy, and if this can be part of it, it will make a huge difference to Australia, without a doubt.
So I'd love to hear from each of you on, over the course of this journey and your respective journeys, what are you most proud of so far?
I'm happy to start off. And the actual, it's because I was there at the start, so I've got I got a head start on you, Carolyn. And Carolyn came on as a board member. We identified Carolyn as someone that could, help significantly to what we were trying to achieve. So Carolyn, before she became CEO, she was actually a board member, and then the CEO left and the opportunity presented herself. But from my perspective, is actually just creating the two vehicles. I can't remember. What's that U2 song where I haven't found what I'm looking for?
Yes, that's right.
I can't remember what
I'm not going to hum it, let me tell you that.
Well, that was my next question.
I can clap it.
I remember for our 20th or 21st anniversary celebration, and this is for Wilson Asset Management, in my speech, I was thinking about it. And I used to, I'm a big U2 fan, and I used to love listening to that. And I used to listen to it all the time. And I actually think when future gen things, entities turned up and started doing what they're doing and, seeing them grow, I think sort of that, I stopped playing that song. It's weird.
Oh, wow. I love that.
Maybe I had found, what I'm.
That's beautiful.
I mean, it's very special. We're coming up to 10 years now. I suppose I feel really privileged and, to be able to lead it. But we're surrounded by so many amazing people that work, pro bono, so many fund managers, but not just the fund managers, but also, our supporters, whether or not it's, working with our lawyers, our accountants, boardroom, there's so many other service providers that are giving their expertise and time for free. And then, working with the board and working with the investment committee, it's really amazing to be surrounded by people who are quite brilliant and, and leaning on them, and they're all so happy to help. And I think that makes a real difference, because everybody wants it to succeed. And then talking to shareholders, it's really good to get feedback from them. And, sometimes it's good, sometimes it's not. But you need to know so you can sort of drive forward and to make changes. But I love the fact that, you kind of, you do well and you do good. It sort of really is a model for that. And the fact that I get to meet these amazing leaders in these not-for-profits who are incredibly special and, so do some amazing work. It's continually, for me, it's like sometimes a roller coaster of emotions, because it's a wonderful position to be in, without a doubt.
Yeah. And it always comes down to the people, doesn't it? And
always.
The way you put it was, you get to work with these brilliant people but they're directing their brilliance and their energy towards something that can have such a incredible impact for people who need it the most. And, that's amazing. Doing well by doing good. So thank you so much, both of you, for taking the time to chat to me on this podcast. I like to end by asking my guests to think about their dreams. If you were to look 5 years ahead, each of you individually, and if your biggest, most ambitious, boldest dreams could come true, what might they look like? Geoff, I'll start with you.
I'm sort of more on that. I'm on that, sector. I'm on the fact that, instead of, currently you've got $3 billion in this, sector, which it means $30 million plus a year goes to charities. I'd love that to be, 5 years, it would take a while to grow, but if the government could come in with some incentives to encourage investment in the space, then you could easily see hundreds of millions of dollars going to that area. So to me, it would be, that's permanent. That's permanent, long-term structural benefits for not-for-profits. So that, and also, and particularly, I think, we say FGX is children at risk and FGG is youth mental health. They're both youth mental health. It's the children at risk is sort of that's part of the puzzle, health puzzle, and if we could do anything, and that's, I think, always been our driver, do anything to make a difference in that area, which particularly, as Carolyn said, on the prevention side. And I think I've said in the very early days, like through all this, if we just save one life, then we've achieved what we started out to.
Beautiful. Thank you, Geoff. Caroline?
Oh, look, I'm on the same journey, without a doubt. I think it's really important that we help, future generations. I think all of us want to do something, and the fact that we can make a difference in a very simple manner. And, if the government, really is serious and, more than doubles philanthropy, and if we can get these vehicles off the ground in a bigger manner, that's incredibly powerful. Think about what we can do. It's a game changer, complete game changer, because the government cannot fund everything. There are so many demands and so many need, for their money and for their support. So if we can do something like this that sort of, coexists, and, we have a lot of people managing that and working out where the best place is to spend this money, I think, that would be an amazing dream, but one I think is a reality.
Wonderful. That is game changing. And I absolutely love that you're both thinking, as big as the sector. So beyond just your own organizations, it's about, what the sector itself can achieve in collaboration with the government. And that's ambitious, that's bold, and that's beautiful. And I want to thank you both for joining me and invite you to share any last words as we close out the episode.
I just thank you. Thank you, Caroline.
Thank you very much, Caroline. Let's do well and do good.
Thanks for listening to this episode of the For Love and Money podcast. If you'd like to take a deeper dive into the purpose movement, visit us at thecauseeffect.com.au. And remember, doing good is good for business. So if you're not doing good, then what are you doing?